Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. It's useless to me to try to figure out why the Nasdaq is down 99.97% when I split it by Bitcoin. If everything is linked and moved by the same forces, eventually it makes sense to say that you only need to own one product, and that is crypto. This is strange, but it makes sense. Okay, the game is fine. Which cryptocurrency is doing better than you? Anything against Bitcoin and Ethereum charts, and if something looks like it's breaking out against those that were sold, in a recent talk with Raoul Pal about Bitcoin Bubble News, it was my job to look at anything that had to do with. He started to talk about what his friend thinks will make Bitcoin more popular and drive its price up. At the time of the conversation, Bitcoin was selling at $62,000, down 2% in the last 24 hours and less than 1% over the last 7 days. Pal talked about how clear regulations and institutional adoption are key to Bitcoin's growth. He also talked about how the price of Bitcoin could hit $100 trillion. A friend of mine talked about how to get ready for the next cycle and stressed the importance of proper rules to get rid of scams and bad players in the industry, like whether to hold or take profits. The value of crypto as an asset class is USD 2.5 trillion right now. If I just use Bitcoin's log regression channel and guess how fast crypto will grow compared to the internet, and figure it will slow down a lot from here on out, reaches $100 trillion around 2032 right now, we use numbers like 100 trillion to talk about money. You need to know what $100 trillion means. $97.5 trillion worth of new wealth has been created. This is the most wealth that has been created in the shortest amount of time in known history. If you think about how the S&P 500's market value has grown over the past 100 years, you can see how huge it is. Because of the U.S. economy and those businesses, we've never seen anything like this before, so now is a once-in-a-lifetime chance to get that 100 trillion. Will Bitcoin make up half of that market? No, to reach 100 trillion, the whole blockchain infrastructure has to be used for things like the finance system for Web 2 companies. All of the other things that Bitcoin does, not just being a form of money or a way to store wealth. For example, if the world had 100 trillion Bitcoins, in that case, how much is Bitcoin worth? It could be $20 trillion or $15 trillion, but the space as a whole is what will grow. If this is the biggest accumulation of wealth in history, it will draw all kinds of people. Now, when you talk about the California gold rush, there was a group of wildcat miners. There were the scams and the thieves. It's clear in the oil and gas business. It's everywhere on the internet and in the gold business. This is because the internet makes it easier for money to move around. Of course, we'll see it here, and it's hard to stay away from it whenever the price of Bitcoin goes up a lot. When it comes to money, you end up with crime. We saw that happen in Russia when the Arm Curtain came down. It's clear in China. We see it everywhere there is money to be made. Bad people are in it. This is always the case, and that's why there needs to be control. We need to get better at dealing with these kinds of people. We're so far behind. The great thing about the on-chain world is that everything can be tracked and traced. We'll figure it out. There are two parts to crypto: the blockchain and the tokens themselves. Okay, let me think about that. Very helpful for showing who is real and who isn't. We've seen Start the World Coin. This is based on the idea that you won't be able to tell the difference between AI and humans, and that blockchain is a permanent record of transactions. That's a great way to do it. This is a way to prove that people exist, or that AI is real, or whatever it is. That seems like a big deal to me. We'll all have a digital name on the blockchain that proves we're real people. On the other hand, AI is moving to a world called agents. AI agents are sub-AIs that do work. Now make me a deck, change this movie, please do this for me, and know this well. It's kind of like hiring people to do work on Fiverr or something like that. These are characters that are made by AI or by other people. AI isn't free though. Both computers and electricity are there. How much do they charge? A lot of them will want to make money. How do they charge so much? The last time I checked, AI didn't have a bank account. It can't because it doesn't have a license. There is no proof of address on it. It will never be able to get a bank account. It also can't because the amounts are very small in terms of both time and price. The whole money system doesn't work for these small things. It moves too slowly. It's too big. It's not quick enough. So the obvious answer to how agents to agents work is blockchain, which is cryptocurrency. As you say, they don't care about the UX, but what you have is an unchangeable record of the transactions, which is where I think the big use case is machines will use digital money. They will, of course. Things from the real world on blockchain, a lot of people in the real estate business want to do this, but their goals aren't completely matched. It's really the property guys trying to get individual owners to sell their shares faster. Retail owners, on the other hand, do they really want to own an Aspen hotel? I think not. I'm not sure if the real estate market is in the lead here, but real estate and other real estate assets, certainly the market for money bond stocks, everything there makes sense. Cars, listen to this stupid idea of having your car titles and other things like that. You need to sell your car. It should be possible to connect with the insurance that comes with everything, and I can send it to you right away in a smart contract. Sure, that has already been tried by other people. Okay, let's see. I believe a lot of real-world assets are on chain. That's not the important thing, though. Things like our identities or things like tickets are what I think of as the big digital goods. These are things that come in huge amounts. Putting ads. People think of these things as real because that's how you can talk to a boomer about it. For example, you could tokenize a house, and they'd say, wow, that's cool, that sounds like boomer talk. The truth is that you'll see most of it in the digital world you live in. So when I was a kid and I went to a show, I had a ticket. From now on, everything will be on our phone app. As a NFT, it can be sold again, and because it's in the smart contract, it may pay a commission to someone in the middle of that. But what if I went to the best show of all time? I was at Live Aid in 1985. If that's the case, I may own the NFT of that. I do have the program and the ticket, but let's say it's now and I have the NFT. People value that NF because it was a famous event in history. My ticket is now worth something, not just on the second market, but also on the third market after the event. Think about how many hotel rooms there are in the world and how many times you get there and then change your mind. You can't leave your hotel. You find that you've lost 300 euros in your hotel room. What will happen if hotel rooms were NFTs or your hotel booked was a fake? Then I could sell it on a market and say, hey, I can't make it last weekend, I went to New York. Here is my $50 off ticket. Someone could buy it from me. That's great, it makes the system more valuable. You can fractionalize a lot of things and free up capital that was stuck in a lot of things. It's kind of like the Uberization of the world. That's why I didn't take gains last cycle, I didn't want to. Because I've learned that the best way to build wealth is to hold on to something for a long time and buy more when it goes down in value. Because you don't. Because if you have, you've seen a bull market go from 1% to 10% and then it drops 80%. You're not going to add 10 back in. Maybe you won't because you don't like taking risks and think, I can't lose everything. Your mind will play tricks on you. That's why you leave it in and say, okay, the time frame I have is longer term. But for people who want to move away from risk or cash in some living chips, then you use a certain time like the end of the year or the start of the next year. You're taking out some cash and will now just ride the rest. Does it reach its highest point early? We don't know if it peaks. In the last few months of the year, as it always does, could it be that we have a blow-off top? Maybe, I'm not sure. We can't really tell, so you need to make sure ahead of time that you don't expect the blow-off top. You've taken some money off and you can take more off if it all goes away. You just keep running it if not. What do you think? Getting rid of everything at the end of the year, or would you say I take the average cost or you sell 80% of it? If you're younger than 30 or 35,